Hello everybody, Rombo here. Hope you guys had a good day. There was definitely some good winners out there, and there's some losers and some that, so that's the way it is. Like to start off with AGRI. I've got quite a few today. I'm going to try to get through them here and make sense at the same time. So, with that said, let's start. I don't like how the light is set up on this. And all that green over there. I gotta see. I'm not a graphics guy. I gotta learn how to do all this stuff. Oh, that's even worse. Oh. Whatever. Okay. I wish I could edit that, but I don't have any. So, all right, let's go. AGRI. Great example, guys. Of at the time, the major primary downtrend was right here. It broke that. Set up another downtrend line, and nice 45 degrees, except for that big major candle right here, pretty nice and smooth all the way down. It breaks the downtrend, gets up above moving average if you want to use them. I have them on here for these purposes, yep, it gapped up. But it broke previous, all this stuff right here, had a run up, and now we're coming back down. Is that bad? No, not necessarily. Now, see, you get FOMO and getting in up here, that's a problem. You always want to think, how much of a run was in it, and have patience and wait for a pullback. Here, the nice run up. Now we have a red day. Now here's the thing. That sets up this downtrend line. So guess what I do? Remember one of my rules? If it's under downtrend line, I put it in my head that this is going to zero. Okay? That's just the way it is. It saved me a lot of time and saved me a lot of money from, just watching my account drain as this goes down. So what do? I let the downtrend finish. If it breaks, the moving average here, then I'll definitely wait, and I'll wait for it to break that downtrend, take a dip, and then I get in after it breaks right here. Okay, so that's just the way it is now. If you're in it here, okay, kudos to you. A little aggressive. Maybe you saw it break over here, and it started going up. Maybe got in after it broke this. Okay, again, I like for it to retest and then do that. Okay, retest whatever your plan is, whatever moving average you use, or whatever. You want to have a higher high and a higher low. So here's the previous high, here's the low. Now we're on a yearly chart, so we're not, okay, here's a high and here's a low. No, we're at price action. I think it was flow. All right, this is flowing down. Now it's flowing up. So now we have a higher high. Do we have a higher low? Right now we do. But we don't know where it could do this, right? It could go down. Why? Because we're in a downtrend. So this area right here, I scalp. Okay? This area I scalp with a super tight stop loss. We're talking maybe trading a candle. So we're in this downtrend, so we'll see where this then starts having not one but a couple of blue days. There's your higher low. Now, does that mean it's time to get in and let it run? No. Why? We're under a downtrend. This is going to zero. So what do? This is scalp area. It sets in a higher high rate. This candle is higher than this one right here. Okay, scalp that candle. See what happens tomorrow. If it starts coming up again, okay, just let it ride. Move your stop losses up. Most likely right here it's going to come back down. Set in a higher high, higher low, and then it breaks. Do you get in? I don't. I wait for the next low, wherever that is, and then I get in right there. Okay? So that's what I have for AGRI. Next we have is CEI. Now I got all these lines up for a reason after I looked at everything. These are the monthly deviations, okay, on CEI, superimposed on the daily chart. Why? And this is, just bear with me, okay, because this is going to come back to make sense later on in some other stocks. Look at where it went on the monthly chart. 1, 2, 3. The gray ones are half deviations. All right, 1, 2, 3. The fourth deviation, 98% of the time, it will not hold above the fourth deviation. Right? We're at 485. We're going to $10. We're going to $30. This white line is the average price. It's the average for a reason, people. It's going to find its way back down. And usually when it's up this high, not always, but there's momentum, it goes up to the +2, it will come down to the -2. This came up to the +4. All right. It got down only to just about under the or to the 1 negative. Okay, we had a great run up, didn't we? And we got to the +1, and now we're bouncing around a little bit underneath the average price from 485 all the way down to whatever it is today, 63. Okay, so it did break this trend right here. It set up another trend right here, but this is the primary. So now this is what I call the secondary on the positive side, which is a sign of a reversal. Okay, so that's good news. See, so we broke it and we came back up, and now we so far have set a higher low. So this is scalping. That's what I'm saying. You come here, you could get in on this candle right here after breaks here, and then you have a tight stop loss. Might have gotten stopped out right here, okay, and you made some money. Good. See the difference between that and, hey, I got in at this low point right here. This is the lowest it's ever been. And now here we go to the moon, and then boom, and now you're starting to sweat, and you're watching your account go down. Guys, don't do that. All right. And overall, it looks like we're getting close to breaking this trend line. I'm sorry, I thought I had that trend up here. Okay, so here's that the big downtrend line. We broke it. So now it looks like we're in a stage 1. Here's the stage 1 is consolidation, and if you really want to be conservative, you wait for it to break $1.09. Okay, yep, you could darn near be up 40% then. But guess what? You could also, you got in and it goes down, you're going to lose 40%. I would rather make 40%, on this move, and instead of losing the 40%, down this way. I don't care about the 100% move. I'm not going to be the first one in, not going to be the last one out. Okay, so, but it does look like good consolidation, a lot of it right here. You can scalp that if you want, put in support here, resistance here as it bounces around. But again, be very careful, have stop losses, and then as it runs up, breaks this area, then that would be a great time to get into CEI. Next is CYBL. Here's another example, guys. CYBL all the way up to what? 1, 2, the third deviation up. We're going to the moon. Here we are, 1.5 deviations down. Comes back up. It broke this primary downtrend line, which is good. Okay, I have an old Andrew's pitchfork on here. We'll see. Yeah, it definitely, here's the bottom of the pitchfork, this purple line, and it broke that. Not good news. But another good thing, guys, of telling you whether you should get into a stock long or not is look at the monthly deviations. They're going down. Here, they're going up. These are places to go in long and be confident, have maybe a little bit bigger stop loss. Here, they're going down. So they're not getting closer together. I'll explain that later too, as a sign of a pinch. But overall, here's the primary downtrend line. Here's the secondary. Here's a third one. So what does that mean? This means it's getting more and more steep, and CYBL's not looking all too hot right now. I would not be surprised. It did put in a hammer, but the OTC they really don't pay too much attention to candles all the time. So it did break the negative 1/2 deviation. I wouldn't be surprised to see it get down to 0.108, 0.058. That's just the way it's looking right now. You're like, gosh, Ron, that's so low. Well, yeah, it is, but we're in a downtrend. We got rejected by the primary, and now we're actually moved. Look, we were so close. Well, we set the trend line right there, and a little bit more space, and now a lot more space. Not a good sign. So take in mind, you always want to look at the deviations and see what they're telling you. That's called the vertical, for lack of a better word, or the diagonal support and resistance, and then you have the horizontal resistance, okay, support and resistance. So right here, we're coming across, we do have support right here. So horizontally, this might be a bottom, but the thing is about diagonals and trend lines, they show you the motion of where things are going. Horizontal is just strict sideways, that's it. It doesn't give you a feel for if it's going to break that support line or not. This right here, we're at a horizontal support right here, okay? But it doesn't tell you maybe give you an idea of if it's going to hold or not. Where when you got trend lines and you see it's getting steeper and steeper, it's giving you an idea that most likely it's going to break. Okay, so that's what I have for CYBL. Next, one of my picks I told you to keep a close eye out on is FUBO. Yep, we're in a downtrend. Yep, the monthlies are going down. They're not getting closer together. But again, what I said is the high volume is at the very bottom of the chart. And so I told you to keep an eye on it. I didn't tell you to get in it, but I'm telling you to keep a close eye on it because I think it's going to go up. Does that mean it's going to go up? No. Why? Old man, dark room, 3 monitors, blah, 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 right? This is for entertainment only. So, but when it starts to break, now we're starting to mess with, and you want to watch the I think this is the 20. Oh, this is the 9-day. All right, we have, and I'm pretty sure this is the 200 EMA here. Really, I can't get away from the deviations. Here we go. Okay, this is the 90. That's the long story why I have the 90 on here. But the 90 is still going down. So if you really, want to be conservative on it, thinking it's going to go to 27, what's $1 or so, wait for this to start to bottom out and to start to move up. Okay, then that would be a good time to get into FUBO, or if it breaks, maybe a consolidation area up here, $4.60 or so. Okay. Um, so that's what I have for FUBO. Next we have is GFAI. GFAI. Great day today. I now, this is not an OTC stock, but it kind of acts like it. It's cheap. We have an evening star here. That's usually not a good sign. MACD's moving up. We did set a higher high and a higher low right here. All good. Now, technically, it didn't fill this. There is no gap here. What a coincidence! Right where that is right where that bottomed out. Okay. We did kiss. Now I'm pretty sure. Boy, that's the 90. So, it did get over the 90. Got rejected. So in the long run, we're going down. The 90 average is going down. We're in a downtrend. So what do you think? I think where this is going to go, 0. All right. I don't need to be in here. I don't care. I'm going to wait. I'm going to wait for what? I'll scalp this. I'd scalp it from down here. Wait for it to break the downtrend, bottom out, get in right there, and have fun. Yep, you don't make 300%, you make 150. You're gonna cry, and really put yourself in that place. Are you gonna cry over making 150%? All right. If you do, I'm sorry for you. Don't look back, look forward. All right. You keep looking back, you're gonna trip over yourself. You stick to your plan and have a good plan and make money from there. So that's what I have for GFAI. A hot one the last couple days. I told everybody Thursday. I told them last week in the Discord about GOVX. I think I called it out at 75 cents. Not a bad day, right? Now, I told everybody this morning I was going to get out around this area. I got out at I think 285, something like that. Because of how it looked on the day chart, I was very happy with getting in sub $1 and get out at $2.85. I think something like that, 287 something. So now. You're saying, well, man, Ron, this thing's just getting started and, it's gone up so much. No, think of it this way. It's gone up a lot. Again, the used car lot analogy, by your house, you drive by that Corvette every single day, that used Corvette, and it's $25,000, just whatever. And then you start seeing the price go to $30,000, then 30. I mean, you're like, what? It's been sitting there and it's going up. Are you going to go, man, that was $25,000. Now that price is going up. I'm going to buy it. No. Now, if you drive by and you see that for 25, then 24, 23, okay, here we go. I'm really starting to like this car for this price. That's what the market is. You see that nice car. And the price is going down. Hey, I like this price right here. Its average is $1.14, and right now it's 70 cents. The price is starting to get up there. I noticed the trend. Is broken. I'm all the rules. Blah blah blah. I'm gonna get into this. Well, now this is smart money. This is smart money selling area, not buying area. All right, the smart money area right here was $1.58, down to 44 cents. Smart money buying, smart money selling. Dumb people buying, and then dumb people selling. Okay. Now again with the monthlies, look at where it got up to. It went over the third, what is that? The third one, two, boy, fourth deviation didn't hold. Why? Because 99% it won't. Look at that one. Touched it, got down. Touched it right here, down. Look at that. Touched it, down. That's why I said this morning that the area I was looking at, I think, was 280 to this area right here, 325. So I and after it hit, look what it did. Tank, hit, tank, hit. Okay, most likely this is going to go down. It might not, but I'm just telling you how conservative stock readers see this. I'm not. Are you kidding me? Just a couple, a week ago or so it was 75 cents. Now it's 325. I'm not touching that thing. Oh, what? Yeah, but it's going up. Yeah, so what? It's going to go up another 25%. So you're going to risk 25% to have it crash, no stop loss, and then you lose all that money because you're risking. The risk to reward ratio, guys, just isn't there. There's 9,000 other stocks out there. Leave it alone. You want to get in before, not during. And darn near, especially not when it's overextended like that. It's going to come back down. Have patience. Find the ones that are getting ready to go and meet your plan. That's when you want to get in. So that's what I have for GOVX. Next is an old friend, ILUS. Now, if it's hard to explain, but see how tight they were here? And then boom, a rip. And now the monthlies are going down. Even though the yearly right here, it's still in an uptrend because of this big massive run that it had. So we're just about down to the negative twos again. And here is the secondary downtrend. And it broke that. Unfortunately, it broke support. And I told you it broke that support. It's going down, and that was at 15 cents. And now we're at 9 cents. And now we're starting to look over to the horizontal area because we don't have too much left. Okay, so we'll start seeing what happens with the horizontal area. Now the good news is, look how far away we were from the downtrend here. And now we're not that far away from the downtrend. Patience. I got out at 47 and just watched this while everyone in Discord, we're going to the moon. 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 All right. Patience. Wait for the trend. Look at where the stock is going. I set that stop, this trend line, back in December. December 10th? Yeah. And I just been watching. Just watching. All this time. So that's what I have for ILUS. Next I have is MULN. So I call it mullet. Another example, guys. Fourth deviation up. We're going to the moon. Nope. Oh, we're going to the moon. Here, I got out right here. Got in down here. Got out. Came up. Hit the second deviation on the yearly chart, and we're continuing down. Now, I said back down here at around 52. Look at the nice small candles, nice 45-degree angle or so, a little bit steeper, but not bad. Beautiful. Hits a higher high, lower low, in. Make that move right there. All right, $1.38 to 417. All these guys lowering, buying the dip. There is no dip, but they're averaging down. All right, or they're like, oh, look how low it is. I'm getting in here under the stop, the trend line, and look at it bottom out, and they're sweating. They're not sleeping at night. Comes up, comes back down. I'm in right here. Bring it across. So you bought the same price I did. You're sweating at night. I'm sleeping like a baby right here. Okay? That's the difference. Be a smart trader. It's healthier for you. um, so right now with MULN, I don't believe I did. No, I didn't. So let's put another stop. Okay. Now we broke the downtrend. We set a higher high. So far, we don't know where the next low is yet. It's still setting it. So we'll wait and see on that. But we broke over. I think this is the 9-day. Yep. So we broke over that. The 90 is still way up high. This is the money line that we're still below that. The monthlies are still going down. So just be patient. Be patient with it. And let's see if we could break like 125. And then maybe scalp it. I would probably wait to put money in until big money 167. That's just me. Again, I'm not a financial advisor, so but I just getting in the lowest competition is not for me. Next I have is the one I've been talking about forever is PSWW. Now there's many reasons why. I showed you what it does at 020. It has big moves. Okay, big move. But here's the thing. Look at the monthlies. Look, see how wide and far apart they are? But now look. That is a pinch. That means there's a major move coming, most likely, not guaranteed. It's not going to be tomorrow. Could be, but we don't know. But usually there's a big move when the monthlies get pinched like this. So it could be to the downside, but we did break, we broke this downtrend right here. And we could probably, if we want, put in another downtrend right there. But I'm not, right now, I'm just scalping this anyways, okay? Because if you remember on the Renko 1 year, it's on the 50s, so here we go. There we go. Okay. This hit 02, 50%, 02, 100%, 02, 50%, 015, 400 and whatever percent, 02, 100%. Now we're at 02 again. Now we've been up, we've been down, we've been up and down. It started jumping right away, and some people got in right away, and they're like, "Oh, thank you very much." No, now it's all, dead quiet. Oh man, I'm at 0%, or I'm even a little bit under. I told you guys this is a long trade. It's going to bounce up. It's going to come down, up, down, then finally it will start printing. If you notice, this was it was up here, and now the price is back down at 02. I would put some money in right here. Maybe wait and see if it comes down to that other level, 015. It could, because it did it right here, but most of the time on the Rinkos, after it hits at 02, it comes up to 025, and then it comes up to 3. And then it might come down again. And I'm still playing this secondary here. So we get up to 03 and we start coming down. I'm going to get out and wait for it to hit 2 again, get back in. So that's my idea with PSWW. But this is probably a minimum of 2 weeks, 3 weeks for just this little move right here. I'm not talking, some big massive move like this. But it definitely could. But at the same time, we're getting closer and closer to this downtrend line. Once it breaks that, then yeah, that you could see a big run. It could just happen right here. It just comes in and boom, it will break it. So um, right now, yeah, I could have gotten out and made. I think I was up 20%, something like that. But I'm just waiting for it to print those candles coming up. So it's a long wait. So don't keep asking me if it's a good time to get in yet. It hasn't even printed candle, and right now it's 0200. So it might not be a bad time. Again, like I said, put some money in that. If you're not comfortable, just put it in a half position and see which way that breaks. And last but not least, I have RIBT, kind of just like AGRI. Um, yeah, that looks ugly on the wrinkles. I'm not going to put that in there. AGRI. Now, yup, but I know you're thinking, oh, hey, Ron, yeah, this is up, 1.5 almost to the second monthly deviation. And on the yearly deviation here, we're at over 3. And look what happened with big topping tail. Yes. But remember, you have to look at the whole picture on this one. Yup, that exactly what I just said is exactly what's going on. All right. But if you notice, look, I'll take the monthlies off here real quick. Okay. We have what? This is it the 90 again? Okay, I gotta remember that on the daily. So the 90, it breaks the 90, sets in higher highs and higher lows. Okay, you could say that's the double bottom here. But look at what it did. It kissed the 90 right here. That's why I'm using the 90 on this one. And we're coming up. So, and now we have a higher high. All right. So, does that mean you get in? No, you wait for a higher low. And then we can make the move up. Because, yes, it's at over the 4th deviation. This could just start coming down to the average price. But this looks like a long-term transition right here. This is a stage 1 reversal. Now, if you don't remember what a stage 1 reversal is, you could Google it. It's basically, this is stage 1, as stage 2, as stage 3, as stage 4, as stage 1. Okay, so signs of a transition. Higher high, we don't have it there, but we have a higher, no, we have a low right there, but boom, higher high, higher low, higher high, oh, you could say that right there, higher low, higher high, higher low, higher high. Now we'll wait for a higher low. And once that breaks off, and you get in, now you always want to keep in mind the deviations here. So, you might have a tighter stop loss. Why? Because you're way above this average price. But this is, on the long term, could be a transition for a long-term hold. Okay, so we could take a look at RIBT in the long term. Wow, new stock. Okay, so you got to be careful about that. What I was going to say is an example of that is that looked like AR. Let's see, we have to go back to the 3-year weekly on AR. Now, just keep in mind, and I'm not saying that's going to happen with RIBT, okay? But that chart that I just showed you on RIBT looked like this right here. Okay, it was a long downtrend. Now remember, this is a 3-year chart, okay? going down, had a little bump up, coming down, and then it broke right here. That's the 9 on the 3-year. It broke the 9. I got in right here. And look at that. Got out right here. Got back in right here. Don't ask why. Got in, got out. And now it's up to 40.12. I'm going to see if it bounces off of 42.5. This might keep going. Because if you look at, I don't want the wrinkle 20-year. Where are we at here? This is why I got into it. Not because I saw this chart at the time. I didn't look back that far. This was a scalp. This started as a scalp. Okay. But then I started looking back at the 3-year, and I'm like, oh. And then I looked at this, and look at that bull. Look at that cup and handle. Boom, hit. I told people back in June about this. It was around $11, I think, back then. And quite a few people from the Discord got into it. And they wrote it from the 11s. And now look at that beautiful cup and handle came down. There's the handle. Broke that right there. Boom. Guys, right now we're looking, about right here. This resistance right here is darn near right on the 4th deviation here. But see, you guys could have been trading anywhere on here. Look, we're above. We kissed the 9-day, and now we're quite a bit far away from the 9-day. So we're getting close. I wouldn't be surprised if we get to 47, and then come down. But boy, talk about a night. That's over 400. Well, let's see here. %742%, people, in around 18 months. I think any of you guys, if you look at your portfolio, if you were up over 740%, not looking at your monitor every day for 8 hours, every single day, but looking at it maybe once a week, and 18 months later, you're up 740%, versus looking at your monitor every single day and looking at your portfolio, and you might be up 60%, 100%, and that would be really good. There's nothing wrong with that, but I'm saying these plays are out there, guys. You have to look for them. That's why don't fall. Okay, every time I put that up, it does that. But there's 9,000 whatever stocks out there. Don't fall in love with the stock and just be glued to that and looking at it every single minute of every day. Go get a scanner. I found this on a scanner. Okay. And I think it was some crossover that I found it on. And they're out there. Have you heard people talking about AR? Nope. But yet, look at this, 740%. So just patience in this really pays off. And not just patience when you're in trade and waiting to see if it breaks, resistance and everything, but patience for looking at your stock. Your scanners, guys, are going to find the gems, not stock twits, not Twitter. You think you're doing homework because you're you're reading on what the hype is and everything. Yep, that might be good for a quick up, in and out. But the gold out there, guys, gold takes a lot of hard work to find, and it's not easy. But save the hour a day looking at Twitter, and take an hour, build a good scanner, just a basic crossover scanner. When the 20 crosses over the 50, or the 50 crosses over the 200, something like that, and look at the stock. You're like, it doesn't fit. Well, guess what? Your scanner is probably going to pick up 70 to 300 of them. Go through them. And look, and more you do it, more you'll start to understand and read stocks, the charts and everything. There's a lot of benefits to it. And something that simple is a crossover, and then being able to look and go, oh, this is a big bull. Okay, I'm gonna stay in this. You get stuff like this. Okay, so there's hard work and due diligence. There's hard and that pays off. There's hard work in chart and technical analysis, and that pays off. And so with that, guys, wow, it was a long one. I'll see if I can put in chapter breaks. So, but with that said, I hope you guys had a really, really good day again today. Have a good night, and get ready for tomorrow, and let's have fun. Bye.